you are a bull here. So we just kind of showed the numbers right now. Decline in January, a rise expected in February. If those numbers do come in line, is that a positive sign not only for the current state of the consumer, but going forward?
Good morning, Frank. Frank, we've been calling for a consumer recession for years, right? And it just hasn't happened, despite the fact that savings rates are way down. And yes, the lower income consumer has been under some pressure. Yesterday, we heard from Family Dollar. Obviously, Dollar Tree comps were up 7. Family Dollar, an acquisition they made years ago, has some legacy problems there. McDonald's talked about inflation eating into the lower income consumer. We know that they're eating at home more. But generally, if you look at the numbers that have come out from Walmart to TJX to Gap to Abercrombie, I mean, the numbers have been phenomenal. And I would say out of the 60 plus companies that we cover in the US and Europe, promotions remain overwhelmingly down year over year. So these are full price sales. They are not promotionally driven here. So most of the signs that I'm seeing still point to positive. You even heard from Williams-Sonoma yesterday, Pottery Barn, which is big ticket stuff. Comps were much better than expected. So I expect those numbers to be in line here and be a sigh of relief.
Okay, sigh of relief in your mind. Brian, I'm going to come over to you. When we talk about inflation, you hear the Fed and other people say you can't go by 1 month of data. But when it comes to this retail report, is this 1 month of data, is that enough of a sign to give you an indication of not only right now, but going forward?
Well, good morning, Frank. No, I mean, it's not. I mean, it's one simple data point. I mean, I would just, to kind of tag up with what Stacey's saying on the consumer, I very much agree that if we look at the consumer today and we take into consideration what's reported for retail sales later this morning, look, the consumer is in a much better spot than the fears of some type of significant recession 6, 9, 12 months ago. No question. But as I look at consumer spending here, whether the aggregate data or probably more importantly, what my companies are reporting, it's okay, but not great. Stacey brought up Williams-Sonoma. Yes, much better than expected. And I think Williams-Sonoma is doing a phenomenal job managing a difficult backdrop. But let's keep in perspective. Comp store sales in the fourth quarter, so that's January quarter for Williams-Sonoma, we're down almost 7%. Okay, so you're still, we're seeing those type of numbers. If I look at the home improvement retailers, flat at best, down modestly. We had Best Buy report just recently, again, down. So the consumer spending is holding in. I think, but trends are okay, not great. And what worries me here, to bring this to stocks, and this is, I've been telling our clients.
We definitely want to bring it to stocks, Brian, so go ahead.
I'll bring it to stocks right now. I mean, I've been in downgrade mode. I've downgraded a number of notable names over the last, say, several months. My concern is you see these valuations pushing towards what I consider to be historic highs. That's Home Depot, Lowe's, Five Below, Nike. So that valuations are pushing higher when the consumer spending is holding in, but not great.
All right, so you're definitely filling that bear role for us. So you keep talking about the consumer, but we always say there's two different consumers, the high-end consumer and the low-end consumer. I'm going to stick with you for a second, Brian. In some recent notes, you cited the strength at Lululemon, but then we're seeing weakness at a Nike and also a Foot Locker that really plays to consumers at all across the spectrum. What does that tell us right now about the low-end consumer? How important is the low-end consumer also following that Dollar Tree news?
Well, look, I think let's talk Nike and Lululemon quickly. I don't know if that's much of a call on low end versus high end, maybe a bit, but I think the bigger call there is you have a very strong brand in Lululemon. Nike, look, great brand. I just don't think you have the momentum behind that brand right now that Lululemon is enjoying. Okay, Foot Locker, I don't follow close. Go ahead.
Oh well, I could have let you finish your point, but Stacey, I'm going to come over to you. Are you worried about the lower-end consumer going forward? I know you think the sales are going to come in line, but still, is there concern about the lower-end consumer going forward?
Yeah, I mean, there's clear signs out there that, let's face it, food inflation is up 20% on a 2-year basis. So that low-end consumer remains stretched, and they have been feeling pressure for a while. But I think that is inflation is obviously calming down. We're not getting deflation. I mean, that would be a huge help for that low-end consumer. We're not seeing any signs of that, and I don't expect that. But I think, again, you're seeing the mid-tier. It's the winners and the losers here. You're still seeing the department store space, whether it's Nordstrom losing share, Kohl's still struggling. So it depends on what story you're seeing. But again, you're seeing some of the apparel brands, just phenomenal double-digit comps here, all full price. So, I think it's winners and the losers here. But I agree with Brian. Valuations are absolutely stretched. You look at Abercrombie, we put
Got it.
a sell on the stock before they reported earnings. The stock is down nicely. Valuations, imply that these comps are going to keep chugging along, heavy double digits.
Valuation seems to be a story for just about every stock nowadays. So very quickly, before we let you both go, I want to get to a news story. Kevin Plank returning to Under Armour. Very quickly, Stacey, you first. Is this meaningful? Is this going to be meaningful for the stock or the broader industry?
I mean, I think Under Armour, like so many athletic brands that are overexposed to wholesale, needs repositioning here. They got overly promotional, and the brand needs to be elevated again. Their wholesale business was down double digits, so absolutely a refresh there, back to full price selling. So shakeup here is needed for the brand. Brian, very quickly, we got to get going. Good or bad? Is it meaningful at all to see Kevin Plank come back?
Definitely meaningful. My bet is good. Kevin's going to bring some energy back to this brand. It's his brand.